Okay, welcome everyone to my Saturday live stream. Can you guys hear me okay? No, didn't cover my short on Carvana, still short. Technically, there's no damage done to that chart, so, you know, things can go against you, but doesn't mean that they're going to actually, doesn't mean they're actually going to go against you all the time. And so until there's technical damage, we'll look at the chart. I'll show you why I'm still short on that Carvana trade. Can you guys hear me okay? Leave a comment below if you guys can hear me. Leave a comment if my audio is good. Perfect. All right. So we'll just get right into it. I'm going to go for, 45 minutes to an hour, and people can pile in as they want to. So, all right, we'll start off with Carvana. Here we go. Let's see. I got that one in my red. So, I like to, in TradingView, I like to kind of group mine into different kind of sectors and groupings. The red ones are these are kind of your momentum stocks. I look for anything that's high-flying momentum. There's a lot of them, so it's hard to, keep an eye on all of them. But I do look at the comments, and, I scan for momentum trades, and typically, by the time it's a momentum trade, I'm usually looking for the counter trade, because that's what's making it popular, is the fact that it's a momentum trade. So I'm looking for that counter trade or the failure of the momentum. Or, again, I don't trade momentum. So if something's setting up, like gold miners, right? Like those might turn into a momentum trade where all of a sudden they're just ripping to the upside and everybody's piling in. And, but I'm not looking to buy those at that moment in time. I'm looking to buy things when there is no momentum and when the momentum is just starting to turn from down to up or up to down. All right, Carvana, let's look at that one. Pull up my lines here. All right, so this is what I got in Carvana. This is why I'm still short Carvana. It's been it hasn't wanted to go, this one hasn't wanted to go down, but it hasn't really been going up for about a month and a half. But here's the trend line right there. You can see all the reactions that we had along that daily chart right there. We broke, and as you zoom in, we broke trend right here, but they just whipped it back. So, because the algorithms and everything, the people realize trend lines, right? So oftentimes there's whippy moves around trend lines where there's market makers trying to take positions, or, and market makers don't want to take a position when there's no liquidity. So they create liquidity in order to take that position. So if they want to be short, let's just give you an example. Let's say you get a breakdown of the sell signal. Everybody wants to be short right here, right? Because it was in a trend, it broke, clear sell signal, and it breaks. Everybody wants to be short. Well, if the market maker or some kind of institution wants to be short as well with a heavy position, they can't just get short with a heavy position when everybody else wants to be short. Because for one, everybody's trying to short, nobody wants to buy, and there's no liquidity. So if they were to just load in their heavy position into that kind of market, they would just, the market would just dump and they wouldn't get a good positioning, right? They'd have a big position and a big, a lot of money positioned in a really bad spot. Maybe their average would be way down here or something. Just not a good spot. They want to be short when there's liquidity. So sometimes what they'll do is buy it back up, create liquidity, get all the shorts who were short to cover, and then they short into that. So those shorts are covering, buying, and then they're shorting into that liquidity or that activity, that volume. All right, so that's why sometimes you'll see like bear traps and bull traps and whipsaw moves around trend lines. But we broke, This one right here, that's a pretty definitive break again, just another rejection, and we haven't recovered that trend line, so that's why I'm still short. Whether, we could obviously run up and do another back test. I would almost expect it, at this point. But again, I remain short until one of two things. I hit my profit target or I get stopped out. All right, I'm not going to stop out right here at the middle of the range. There's no reason to. I'd stop out if we started to recover the support line again, started to bounce up in here and, close out days where we're recovering that, then I could stop out. Or we run down to my profit target, which right now I've got down here at about 175 area. And we haven't even hit the 200-day moving average. We're pretty close. I think we're probably going to at least get down to there at a minimum. So you could cover and take a little profit at the 200 and then ride the rest down maybe. All right, moving on. And again, negative divergence right there. Oh, and just to get into a little more detail, and it's not so much about Carvana, it's really just a lesson in how to read charts. But you'll see here, see the negative divergence on this? It's just huge, right? It's just this big negative divergence. Each one of these was a divergent high. So each divergent high, if you were to short at each divergent high, doesn't always work out this way, but in this situation, if you shorted down to the trend line, you would have been profitable. There's a divergent high, you short, you make money. There's a divergent high, you short, you make money. But there's no bullish divergence, right? Look, as I zoom in on the daily, see how we're just kind of making kind of equal. This was slightly higher high. There's a higher low, higher low. So we're trending up in the short term right in here. And as you zoom into the RSI right here, you can see it's trending up right there as well. So it's just momentum's moving with the price action. The PPO there, you do have a lower low in momentum and a slightly higher high in price. So again, no bullish there's just no bullish divergence. I just, what I will look for is higher momentum and lower price. All right. So if we come down here and start to sell off and then momentum is starting to make higher highs, that's bullish divergence. That would signal that we're likely going to reverse trend. Okay, moving on. Redfin. Yeah, that one I've been watching that one every day. Where's that one at? Let's see, right there. So on Redfin, I've got this trend line right here. We had a brief dip below it, but it's recovered it. And again, this is an example. If I was short right in here, I would have remained short. And then once it started to recover, I would have covered the short right there. All right. So that's how that would have worked. But I wouldn't, I didn't want to short, until we started to break the trend, and it just didn't look like a good short. This one, I'm looking for a break of this trend line right there on the daily, and it just continues. You can clearly see the reactions. We dip below it. That's not really a sell signal right there, though. You want to see an impulsive sell down. If you just barely dip below it, and look at that candle. See how it was at one point it was down here, and if it closed down here, that would have been a sell signal. But it didn't close down there. They bought it back up, and it closed back there. The buyers were kind of there fighting it. The next day, they just ramped it right up. So no sell signal. You want to see impulsive selling to trigger a sell signal. So a break of that trend line, and support on this one. Yeah, I don't know. That's why it's not my favorite chart, but I'd say somewhere down in this range, down around 34, is the best that I can see. Again, these are momentum stocks, so they run really high and they they can fall quite a bit too. So down at 30, probably down in this area, 30, I'd say 37 down to 35, 34. That'd be your support range. Okay. PDD. What's PDD? I don't know what that one is. Is this a lithium? No. Is it a Chinese stock, or what is it? I don't know. All right. I guess it doesn't really matter. Looking at the daily. There's your negative divergence. There's a lot of negative divergences across most charts because of just the fact that we're just raging at all-time highs and on low volume. It's just set up for negative divergences. All right, so there's your negative divergence. So, you know, these are all divergent highs, kind of right in here. This is your divergent high price action. You look for a break of trend. Well, let's look at this. Yeah, that's not a really clean trend line there. I don't like that one. Again, you need more than 2 data points to give you a solid trend. Yeah, maybe that might be your trend right there. Maybe something like that. I'd say right about there. So, yeah, break a trend, back test, failure. You know, could back test some more. We're bouncing off the 200. What I would say on this one, a couple things, is you could short probably at a break of the lows. You get an impulsive breakdown right around here, 121, or let it run up and do another back test whenever that's going to be, and potentially short up there with a stop, you know, slightly above. Again, you always want to set your stop slightly above. Keep your losses small. I teach that in my course. I don't talk about stops a lot, you know, on my daily videos, but you know, you'd want to stop out with a recovery and a hold on a daily candlestick above this trend line. A convincing recovery too, not just a marginal recovery or an intraday recovery. Sometimes what they'll do is they'll bid it up or gap open way up here and then just sell it down. You don't want to stop out on that. You want to wait for that close. So moving on. TDC. Let's see what that is. What is this? Skynet? Teradyne? Or what was that company from Terminator? Cyberdyne Systems? Teradata. All right. Let me look here. Sometimes I just have to kind of draw some lines in the beginning. Yeah. So I would say about there's your trend line. Someone said I think they just said they shorted this swing. Yeah, they just shorted it. Well, let's figure out why you shorted it. See, okay, so there's a divergent high, clearly, right here. Big gap up. That's a divergent high because that gap up was on, you know, way less momentum. The only thing is you don't have confirmed divergence. So to confirm divergence, what you want to see, and that's why I'd probably wait on this one for confirmation. What you want to see is zooming in. You want to see this PPO. If you don't have PPO in your chart, I pay for the premium version of TradingView, but you can use the MACD, moving average convergence divergence. But see how this is pointed up right here? You want to see that start to turn down, all right? And then on the RSI, same deal. It's pointed up. You want to see that start to turn down because the price is up. The moment this is pointed up, if the price continues up, we're just going to go up and burn through the divergence, and then you're not going to have negative divergence. So, you know, ideally, you want to, you know, if this wants to run up and make a new high, look for the momentum start to turn down. That would be your sign. And then what I would wait for is a break of a trend. So let's say this starts creating a trend like this, just kind of makes a slightly new higher high, making a daily trend. I'd wait for a break of that trend. Once you get that break with the negative divergence, that's your sell signal. And then on this one, I target probably the gaps. You know, one gap would be gap entry right there, and the next gap would be gap fill. All right, so those would be my targets. And then this lower trend line, yeah, I don't really like it that much. Just probably throw that away. And then obviously another gap down here. So those would be my targets, those gaps. I would look to take, profit or cover some of the short position, or cover and then recycle back into a short. Each person can do it differently, and cover into these gaps as you start to fall. And you don't want to wait till you hit the gap either. You want to cover slightly above, right? Because everybody's looking to cover and take profit right at that thing. So you want to front run it a little bit. And yeah, you can sometimes whip down through it, but that's kind of how you want to do it. So one way that I'll do it is, if I've got a position, maybe I'll take, 30 on my first target, I'll take 30-40% off. And then if you bounce, I'll recycle back in short. And if you don't bounce, I'll just take what I've got and roll down to the next target and then take the rest off. All right, you want to lock in profit. Let's keep going. Yep, gold miners working out well. Yeah, they are. We can kind of just scan those real quick. Again, I put out a video weeks ago and over the weekend, and it was literally dedicated just to gold miners, because I was looking at these charts and they all were setting up. And I saw setups in a lot of the gold miners. So as a sector, I just started to see a real bullish setup in that sector. And I wanted to point that out before they started to run. And, here's like wheat and precious metals. This is one I've talked about for a while. Had it circled. The trade on this one for me, what I did is we had some support right here at 37.30. Or 37.20, right in there, basically. You can see support. They front-runned it there and bought it up before it hit support again there. Then it broke, all right? So that's a sell signal, all right? That was a sell signal. But the reason why you don't want to short that sell signal is you've got bullish divergence. See, the bullish divergence was intact. So you made a new lower low, but on higher momentum. Everything needs to align for the highest probability trade. So you had bullish divergence with the sell signal, but not a sell signal you want to take. So the trade that I was pointing out was a recovery of the broken support would be a false breakdown or a bear trap, and that's where I went long, right there. It popped up, came back down, hit it again. I added to my position, popped up. It broke. I think I added a little bit more right here on the breakout. I didn't like the breakout. It still hasn't been that impulsive, this breakout. So I'm thinking it might come down and back test a little bit. So I'm watching for that. I'll probably add on a back test, but still, looks good. And this one from the entry from that I said through, it's up 15%, so it's doing good. The rest of the miners are doing good too. Going short often in a bull market seems like a hard way to make money. Yeah, well, it just depends. I mean, there's always trades in every market, and I mean, if you want to really look at just the S&P 500, if you're talking about the market, and recency bias would say, yeah, this is a bull market and everything's great and it's an easy way to make money. I doubt everybody felt that way when they were down in March, and if you're a bull and you're always bullish, then you most likely rode this down. And, you got bailed out by the Fed. So now you feel like it's easy money in a bull market. But if you really look at the volatility over the last couple of years, we've had big drops, big recovery, big drop, big recovery. So, you can make money on both sides, Do I want to be long up here? No, not particularly, Do I want to be long down here? And if you go back and watch my videos from back in March, around that time frame, I talked about how I was going long. I didn't ride this entire bull market up because of my broken trend line here. That's really gonna give me a general bullish or a bearish theme. But I was going long down here, so I don't want to be long up here. All right, I want to be long down here. I want to be short, looking for shorts, and I'm not short right now, but I'm looking for shorts up here. So everything feels great at the top. And that's usually when the top, that's usually when the top's in. So I just look at the volatility. You look at the volatility, look at the bull market, all right? This is a pretty consistent grind higher. And then when we get up in here and we break the trend, it's just been these huge moves up and these huge moves down. Extreme volatility over years. So, I just go back to think of, if you were bullish and long, and to go back to think about what was going on down here. And what happens next time, if we come down again, what happens next time? The Fed, maybe they'll try to pump it up again, but eventually it's going to start causing real damage. Maybe your stocks go up, but your purchasing power with the dollar goes way down, and you actually make no money. That's what happened in the 1970s. Stocks kind of went sideways, which maybe that's what we're in for. It's just this big sideways market, and yet inflation and the purchasing power and the prices of everything went way up. So at the end of the day, if you just held stocks long, you lost like 40% or something like that over a decade. Okay, let's move on from that. That's not really technical. I just want to kind of point that stuff out. Don't fight the Fed. Yeah, well, I'm not really fighting the Fed. I mean, the Fed likely, look, when does the Fed step in? All right. The Fed steps in with big programs when the market comes down. All right. Here's the Fed's coming in down here. The Fed's coming in down here. The Fed's not coming in a major way up here. I mean, yeah, they're continuing their buying programs, but they're not going crazy like they will down here. So, there's room to come down, and then maybe the Fed steps in. And at the same time, those gold miners are not fighting the Fed. If the Fed is going to continue to go crazy and pump, those gold miners should continue to run. And those right now are my largest position. I'm pretty loaded in those right now. All right, let's get on past that. Snap. Snap, crackle, pop. All right. Snap had earnings. It was pretty volatile. So they basically, gapped it up on the earnings. It sold down, and then like the last 10 minutes of the day, or let's look here. You'll see here the last end of the day ramp. What is this? Last 20 minutes of the day, they ramped it up. That's not consensus. That's the end of the day, last 10, 15 minutes on a Friday. That those moves usually get faded. So I would just look for that move to get faded. But in general, even if it doesn't get faded, I'm not going to continue to. I'm still short this thing because we're below this trend line. So yeah, we could run up and do another back test up at 67.80. I'd probably want to add there. And I'm looking to add on back tests of this broken trend line. But ultimately, I'm looking for this to roll over. And look, this is a lower high. You've got a high, lower high. This is kind of equal high, slightly lower. This high right here is a lower high. We're downtrending. It's just, you just can't quite see it yet because you don't have the big. A lot of people can't see the downtrend until you're way down here and you're like, look, we're downtrending. Now, you got to kind of look before that happens because that's how you make your money. You make your money on. You got to be, before the move happens typically. And so I'm thinking lower prices. Eventually, I believe we'll get down here at 48.20. Probably get a bounce off that. I think it's likely you'll get a bounce. I think it'll be a muted bounce, though. It won't be as big as maybe this bounce right here. I think it'll maybe be about half the bounce. And then we're going to break. This is what I'm anticipating. We're going to break that and head down to fill this gap. I don't see any reason. I see no bullish divergence. The momentum is not picking up. Momentum's not diverging in any way. So still looks like a short to me. Now, if we start to break higher and recover and get back up in this area and start to recover and hold daily closes, I'll stop out. So you always have to know when you're wrong and when to stop out. Where's the SPY and Qs heading in May? I have no idea. There's no way to know. I mean, I don't know. We'll just wait for the charts to tell us. I think we're going to get a sell signal here pretty soon. What I'm watching is these NASDAQ futures are a pretty clean chart to watch right now. NQ, you can see here on the hourly. I've got this support shelf. it's, every time they dip below it twice and recovered it. But I'm looking for some sort of definitive break of that. Right now, it's about 13,770. We start to break from that. I think that's going to be your sell signal. Until we break that, we're holding support, and that's it. Baba. So I'm long Baba. I just got long Baba last week. We'll see how this thing plays out. But I like it long right now. Here's your trend line going back to 2015. Nice clean up trend line right there. As we zoom into kind of the most recent time frame, look at that bullish momentum there. And not, it's not quite bullish divergence, basically, because we didn't make a new low, but it is bullish momentum right there. Price has never made a new low from this low right here. So I don't see bullish divergence, but I do see just, we're at support. So bullish momentum at support. I'm long. I'm looking for a move probably up to about right up here, about 266. That was a level of resistance. So I'm looking for a move up to there, and that'll probably be the trade for me. AMD. I am still short AMD. And here's why. I mean, look, I'm not going to just get out of a short because the stock goes sideways. All right. And even if it has a slight upward move, your positions don't just go in your favor instantly, and unless you're trading momentum and, you're hoping to just buy and sell quickly, you often have to, they're just not going to go right in your favor. But they go in your favor in a big way when everyone realizes that you're on the right side of the trade, and then they all pile in, and that's how you make, most of the money. Appreciate that, Barter. Appreciate that. And so look, here's AMD. Here's your uptrend line right there on the daily chart. That's a long trend. That's a big long trend, multi-year trend, and we're breaking that. So not impulsively yet. I mean, it's an impulsive breakdown right here. It's just I want to see more impulsive selling coming into this thing. It's not going to happen until the market breaks. And you can see we've just been kind of chopping sideways with a slight upward lean, kind of like that. So yeah, I mean, this thing's just going to, continue to go. I'll want to stop out if it, gets way up here. But yeah, that's really all I see. And so, yeah, you have to be willing to kind of take some losses. I mean, that's up here 8%. So you got to, again, it's all about risk reward, right? So let's say we get up in here and I'm down about 10% or so. Well, I wouldn't be down 10% because I, shorted it right there. Let's look. Might be a little bit more. Yeah, about 12% or so. And it starts to recover and I got to take a 12% loss. Okay, couple lessons on that. One, don't load the boat with any one position, right? If you're going to take 10 positions, take 10 equal sized positions. Or, no, don't do that. I mean, it depends on the stock, right? If you've got a penny stock, you don't want to take an equal position in a penny stock. You need to understand the volatility of any stock and adjust your position size accordingly. But it's all about risk reward. So if I have a 12% loss potential, and my profit target right now it's really here, 50. It's about 59. And from the entry, that's a 26% gain. So what, 2.5 to 1? So that's a favorable risk reward ratio. All right. You need at least a 2 to 1. I think you really want to be taking 2 to 1s. You don't want 1 to 1s. 2 to 1s are good. 3 to 1s, obviously anything better is better, but at least a 2 to 1 is a good trade. And so that's the trade. And yeah, moving on. AMD earnings Tuesday. Okay, well, we don't know which way it's going to go. I mean, if AMD earnings comes out and it's good, it'll probably open up right around this gap or right around this trend line, and that might be a good opportunity to short or add to a short. Oftentimes, sometimes those earnings reports, the gap ups when they're gapping right into resistance, everybody gets bullish because they hear earnings are great, but that's actually the best opportunity to sell that thing. So I'll watch that, and if earnings are bad, then we gap down, most likely. I don't know which way it's going to go. I know there's a shortage in the semiconductors and things like that, and the chips. I don't know. SPXU. Let me look. What is SPXU? Ultra Pro. Okay, so this is a leveraged. I don't trade the SPY a lot. I prefer the IWM or the Qs, but this is a short. Okay, so this is there's nothing here. Just watch the SPY for your signal on this kind of thing. If you want to short and you don't have the ability to short, you can take these leveraged accounts, these ultra short accounts. This is probably 2 times leverage. Let me see. Yeah, I don't know what this is, but it's probably 2 times leverage. And you can buy these things long as a way to go short if you can't actually sell shares short. I don't buy options. I'm not buying put options when I short. I have no time. There's no time working against me like an option. So the trading style, if something's going sideways and going against me, as long as it's not broken, I can just sit there and sit on it because I don't have time working against me, really. I mean, you have to pay a little bit for borrowing the shares, but it's relatively small. And, so I sell shares short, all right? So what I do is instead of hitting the buy button to buy a stock, in my brokerage account, I load up the amount of shares I want to short and I just hit sell. And, I'll hit the limit, the bid or the ask. I'll hit the bid, I'll hit the sell, and then my position size will say let's say minus 100 shares. That means I'm short 100 shares. And then when I want to close the trade, I just buy 100 shares back. All right. It's the opposite of going long. And that's how you short. So it's just making money when the stocks goes down. But I go long some things too. I'm long, I'm long the gold miners. I'm long coffee. We can look at that one. These ag commodities are just ripping. I mean, they're just, so we got to watch that because if the Fed, I think, speaks this week on Wednesday, and usually there's some good opportunity on Fed days. So I'm always kind of pumped for Fed days for trading. And the things that I usually pull up on Fed days is I pull up gold. I'll look at NUG, NUGT. That's a leveraged gold mining ETF, and that will be just a day trade kind of thing. But I'll look at gold. I'll look at dust. That's a dollar long or a miner short, basically. And then I'll just be ready to potentially short triple Qs or something like that. The Fed has the Fed moves the market. So, and if the Fed's not going to address inflation, then the miners and gold should continue to rip. That's kind of what I'm thinking. So if, and the markets could continue to go higher too. The markets are high on liquidity. So if the Fed's not going to pull back that liquidity, then, look for those miners to start really ripping to the upside. And one way to play that, at least for me, and I day trade the Fed day. I don't recommend that for a lot of people. And I have day trading, a day trading platform. I'm not doing it on Robinhood. I use Lightspeed desktop trader. I have direct execution to the exchanges. But, NUG is one way that I play it. I don't invest in NUG. I don't swing trade NUG for the most part. I'll use the gold miners. But, day trading, that thing can run like 20% in a day. And I'm out of that position by the end. All right, so coffee. That one. Let's look at coffee. So I like this one. Just it's kind of lagged the grains. Wheat and corn are ripping to the upside. Soybeans, just exploding to the upside. Corn, wheat, those are all ripping, and then coffee's kind of just hanging out. Still uptrending though, and you can see here we're making higher lows here, and so I think we're gonna make a higher high. We got to break this one right here at about 40.50, break out there. And then we've got, this spike right up in here. This one, Joe, they just switched this from a different ETF back in 2018. It was named something different, so that's why it doesn't have a lot of history. But I think it was something else for the last 10 or 15, 20 years. But to me, it looks like we're bottoming on this, and we're going to start moving higher. I like it. I've been adding to this one. Just the other day when it dipped right here, I was hoping I could get it down here at 36.60, but I just added to it right there, and it's going higher. All right, let's move on. DBA, that's a commodity ETF, and I like it. I mean, I don't even need to look at the chart to tell you guys I like that one. But I mean, if you want, that one's going to have a lot of different commodities in it. It's probably a basket. I think it's like 10 different ones. I've charted this one, and it looks a lot like the grains and everything. So you got a downtrend here, and this is going back to 2014. You got a breakout, a clean breakout. It's pretty extended, that's for sure. We do have negative divergence right now. So this price that's ramping higher is a higher price, but it's on lower momentum, but again, not confirmed. So if I zoom in, we're still pointed up. You need to see this turn down to give you that negative divergence. So if this continues higher, you're going to just continue higher in momentum, and there will be no negative divergence. So just watch that. I mean, I could see a pullback. I'd be looking to buy pullbacks. That's kind of the point that I'm trying to make. These look like they're putting in that like they bottomed, and they're clearly in a bull market. And I look to buy. I look to go long on a bull market on support. All right. We'll go a few more minutes, and then we'll wrap up. Facebook. I never really liked Facebook as a stock. It was pretty erratic. So I usually just watch the other FANG ones. But, you can see my chart's just a mess here. I've tried to chart it, and, I can't. I mean, this is a pretty clean trend line right there. Looks like we broke back in 2018, broke trend, and it's been back testing ever since. You can see right there. So I would say we're below trend. We could run up and back test again though, up to 354. That's possible. What I would be looking to do is short this thing as we get close to that trend line. Maybe a back test and then look for rejection, and then I'd look to short up there. But it doesn't mean you can't go from 300 to 350, right? So no position on me for this one, but I would be looking to short up there. Looking at the daily. Yeah, there's negative divergence. Let's see. There's a high. And there's your high. So there's your last high right there. And then you made a new high. It looks like we just kind of went over it right here. And it's on less momentum. Zooming in, you can see. See, there's a confirmation of negative divergence. See how it's turning down? That's what you want to look for. See the RSI, see how it's turning down? So price is made a new high. Momentum is, putting a negative divergence. I'd probably look for a break of this. So here's what I'd say about Facebook. A break of 297, we could go lower. Or it could obviously bounce and run up and make a new high at 350. I'd be looking to short up at 350 or at a break of this 297 area. I just don't like how this one trades, so I just choose to pick other things. But that's my take. And your first stop would be the 200-day moving average, and a break of that, and then we're likely going lower. Probably down to, I've got this marked out. There's some support down there. So I would say 223.75. All right, moving on. IQ. That's a Chinese stock, right? That's a lot like BABA. That one's volatile, isn't it? Do I have the right stock? I don't know if I have the right one. You know, sometimes they'll have a bunch of different ones here. Cleared bullish divergence. You can see that. That's nice. See that bullish divergence right there on the RSI. Not on the PPO though. So mixed signals there. All right. On the RSI, you can see, kind of zooming in, there's your bullish divergence, how it's making a higher low. And then you'll see the price obviously is a lower low. So there's your bullish divergence. It's not there on the PPO though. Usually you don't have to have it on both. I mean, it's on one, but it's nice to see it on both. So on the daily, and we'll kind of hone that in here on the hourly. If you guys are trying to follow along with my charts on my videos, make sure you're using log scaling, all right? Everything is log scaling. The reason why you want to use log scaling is because, I'll give you an example. Well, let me finish this real quick, and then I'll give you guys an example. Yeah, so looks like a breakout, you know, to the upside. This one's pretty volatile. You've got some resistance, obviously, right there. Right, see there's support, there's support. That's your first level of resistance. A break above that, and she's probably off to the races. But again, this one's pretty volatile. It's like choppy. All right, so the log scaling though, I'll show you guys why you want to use log scaling. All right, so here's AMD. So this is going back to 2016. Log scaling allows me to chart the long-term trend. And I can evaluate the long-term trend in a readable way. See the trend line? If I take off the log scaling, that's what it looks like. All right? There's no way to chart a trend on that. And that's because price, you know, price just goes up, but it doesn't track the percentage gains. So there's no way to actually chart it. So that's why professional technical analysis use log scaling. All right? That's a nice clean trend. I can chart it. Non-log or linear scaling is just a mess, and that's why a lot of retail people they'll look at the linear scaling, and every single chart looks exponential. If you go back far enough, every chart looks exponential because the dollar, you know, it's just things go up in dollars because the dollar is losing value over 100 years, but it doesn't mean that you're actually getting gains. So log scaling, that's just really the point I'm trying to make. All right, moving on. Looking for interest. Bitcoin's kind of interesting. I'm kind of interested in Bitcoin right now. Shorting it, of course. But there's what I got on BTC. We'll see how the weekend plays out. This is the futures. This is the Bitcoin futures. But they should track Bitcoin pretty well. And I've got an upward trend line. I see a break. And that was a gap down too. So gap down and an impulsive sell-off looks like a sell signal to me. Now we could run up and do a back test. That's possible. But I'd look at back test as an opportunity to probably short into. So I'm liking this one actually to the downside. I think we're probably heading down to 31,000 and then 24, 24.75 or something like that. So I'm watching these levels. And then we also have this level right here, 44, it's about 45,000. As 45,000 is your next level of support. I think we get down there first before maybe getting a bounce. So I actually shorted some Riot on Friday. We'll see how that works out. Now with Riot, this thing moves like crazy. So I take a pretty small position in it compared to other size positions. If I'm going to put like 15, 20,000 on a position, then I'm going to probably do with Riot, I'll probably do something like 5. All right. And that's just because of the volatility. This thing will move 20% in a day. So, you can make $1,000, in a day just on the right move with this thing. And so Riot, I think Riot's going to break down some more. I think down to probably this level right here, which is about 29. From where we're at, that's a drop of another, 23%. So I'm looking for that. We'll see how that works out. All right, what else do you guys got? Yeah, someone says if the Fed says they will taper this week, yeah, they're not going to say that. But if they did, yeah, be on the lookout. Be quick to the trigger on that one, because any kind of word of taper, they're not going to come out and say taper. That would be too much of a jolt. So what they'll do most likely is start to back talk. They'll start to talk up inflation being a concern or starting to notice it. That's how they're going to do it. Okay, we notice there's a little more inflation. We still think it's transitory, but we're noticing that it's definitely here. We're starting to approach our targets, but we're not going to do anything yet. Then down the road, they'll start to say, okay, inflation's now hitting our targets. We're starting to monitor that. Okay, now, and then eventually, they'll say they're going to taper. But the Fed's in a real tight spot, because if they say they're going to taper, look out below. That's all. That's it. When any kind of tapering, any kind of pulling back of money, any kind of pulling back of liquidity, markets are going down, and in a big way. So, we'll just trade that when it comes. Yeah. I don't like options. I just, stock trading's hard enough. You've got emotions to manage. You've got levels. You've got position sizing to manage. I don't need time as an element, to be part of that. So if you really like something, you can just add more, take a larger position, and that's always a potential. But I just want to be right. Okay. I don't have to be right next week. I just want to be right and make money when it's right. So that's it. Yeah. Intel, I've been watching that one. I was going to talk about it. I think I pointed it out on my video. I didn't take a position in it, but I definitely noticed the breakdown of the trend line. Here's Intel right here. So it broke the earnings. It had already broke. It was a short already. I didn't jump on it. I was involved in other stuff, but here's your trend line in Intel on the daily chart, and there's your breakdown. It broke a few days before earnings, and then earnings came down, and boom, there's your smackdown. Right below, look at that trend line I already had marked out right there at what is that, $60 or whatever. So that's where that held as resistance, closed below it. So I think Intel, if you want to look at the longer term chart, yeah, I think we're heading down to this trend line, this more major trend line down here. That trend line comes all the way back. Let's roll back on the weekly chart. That goes all the way back to 2009. That's your bull market in Intel, all right? And so as I zoom out, look at that weekly. I mean, that's a sell signal on a weekly chart. If I've ever, that's as good as it gets when it comes to a sell. You want to see confirmation, but on a weekly, when you get confirmation, you might be at your target by the time you get the confirmation. So on the daily, though, Intel to me looks like it's heading down to somewhere right in there, 52, 70, somewhere right in there. 50, it depends on when it gets there, of course. And from there, that would be a drop, a continued drop of another 11%, 11.5%, something like that. I like that one. Not my bet, not the best entry though. This was your entry. This is where you wanted it. And look, negative divergence. See that? This tells you that you're going to get a breakdown soon. Then you see the breakdown. That's your sell signal. That's your time to enter. And then, now this is your time to make money. This is not the time to necessarily enter a trade. It's already started to break down. you know, this is where you start making the money and just, you know, looking at when you're going to exit your trade. All right, 5 more minutes, guys, and we're going to wrap. Let's get in your final picks. Peloton. Yeah, Peloton's just hanging out on support. I'm eyeballing that one too. So here's Peloton. There's my support line on Peloton, which is 98. It's about 98.50. Look for whipsaws around that level because, you know, I don't know, Kathy Wood's in here, you know, pumping things. Who knows what's going on? But, you know, there are, you know, this thing will trade erratic. I've watched this on the intraday. It'll be like selling off and then just randomly out of nowhere, just a 10-minute spike upward of buyers come out of nowhere and out of no level either, you know. So there's obviously, you know, there's things going on in this, people trying to keep it up. But I got it right there. It's that level at about 98. What did I say before? 98.50. We'll call it 98.50. And I'm looking for an impulsive break of that. If that breaks impulsively, then I think we're heading down to about $80 as the next level. And, you know, we had some bullish divergence right here. And you know, and we actually still have bullish divergence as well. So kind of waiting to see what happens on that one. You can see, and so that's the thing. I'm not shorting it here because we could bounce, you know, we could bounce off of this. But if you get the break, that's what I'd be looking for. All right, and AI. I see 2 people want me to look at AI. What is AI? I've never even heard of this company, what this is. What's the name of the company, AI? Do I have that one right? C3.ai Incorporated. Not a lot of history on that. So technical analysis, you do need some charts and technicals laid out on the charts. There's your bullish divergence on this one. See that right there? And so you were making, there's a divergent low, and that's basically a divergent low too. So those both are divergent lows. Now what I'd be looking for on this one, so it's got bullish divergence. So in general, I'd want to lean bullish on this one. I'd probably want to wait for a break. Yep, we'll call it right there. A break above 70, you know, 71.85, a bullish break. And not just an intraday break. I mean, you can take the trade on an intraday break, but just bail from the trade if it comes back down, if they whip it, you know. Like, here's your break. You could take the trade here and say, okay, I'm long. But when it fails and starts to come back down, you bail. Because you need to see that daily close. You want to see that daily close above, you know, a nice impulsive breakout, and this one's likely going higher. Where is it going? Well, look, you've got some, let me just kind of tighten this up. Yeah, I'd say probably a level right in there, you know, 91.30, 91.28. Again, if you're going to be long, you'd want to, if you're trying to trade it, just trade it, you know, and not invest in it, then you want to take profit slightly above that resistance level. But I would say somewhere right in there is going to be your first level of resistance. And a break above that, you got a gap all the way up here. Just right there. That's about the next level. You can see it's roughly right in here. We dip below it a little bit, but I would say somewhere right in there at about 115.50, we'll call it. Okay, moving on. Yeah, I did Bitcoin earlier in the video, just 10 minutes ago or so. I talked about that. So I just covered the Bitcoin futures, but you can go back and look at that one. Laser. All right, this is a momentum stock. I think it's what, Lumineer, whatever. All right. Well, clearly starting to break to the upside, so we'll look to see if we could. So I don't see bullish divergence. I start looking at the divergence. See this right here? See how that's just negative momentum. We're still going down. All right, here's the PPO, same thing. All right, so then you look at the price is going up, but the momentum hasn't given me a signal that there's going to all of a sudden be a trend change on the daily chart. Let's look at the hourly, see if there was anything there. Yeah, a little bit on the hourly. You can see where we started to build a little bit of bullish momentum right in here. So this was divergent low price action here on the hourly. And so now you've gotten an hourly breakout clearly. There's your downtrend line. So you had bullish divergence on the hourly. You look for a break of the trend. There's your break. So that's bullish in the short term. Where do we struggle on this one? Basically, we're right where we're at. It looks like it bounced right to major resistance on the daily chart. See here, that was support. Undercut it a little bit there. Brief close, not an impulsive break. Held support right there, and we bounced right to resistance. So that's the area. This is where I'd want to short at. To be honest, I might short this thing on Monday if I can get it around this level. This is where I'd want to short at. One more, guys, then I'm done. Which one should I do? You guys let me know on the last one. Let's find a good one. Give me a thumbs up, guys, if you haven't done so already. Space. You guys like Space? That one's kind of interesting. I mean, it's a momentum stock. Everybody thinks they're going to get rich with that one, or they did. It's just kind of an example of these how these momentum stocks can just crash. Domo, yeah, that one's I've heard about that one. I got what, two space votes, 3 space votes. Is that the one you guys want? LMT, what's that? Lockheed Martin. I'll cover LMT in a video. That one's, that's probably a steady Eddie stock. So if there's a short on it, it's not going to be a crazy short, but doesn't mean it can't just trend down for a while. It's not going to collapse, most likely. Wow. Yeah, we're not doing... What is wow? I don't know what that is. Tesla, there's no sell signals in Tesla. It hasn't broken down yet. So, I mean, in the short term. I'll point out Tesla when I see something interesting in that one in a video. I'll cue you guys up on that when I see something telling me we're going down again. I think Tesla's going down. If you guys want to know what I think it's going to do, but it's not in the charts yet. So we have to wait for that. So I'll let you guys know on that when I see it in a video. All right. Well, LMT. All right, we'll do LMT and then Space. All right, that's all we're going to do. All right, here's Lockheed Martin. Looks like I've looked at this one before. Yeah, kind of a messy chart, actually. Okay, so downtrend line there in Lockheed Martin. Broke above it. That helps validate that. See that right there? How we impulsive break. See the nice impulsive candle. Come back in for a back test, hold, and then off to the races. That helps just validate that trend line, which, you know, you had a lot of reactions on that trend line, so it's pretty easy to see. No negative divergence in the momentum. So just bullish, bullish momentum, bullish price action. I'd probably look for a back test and go long. That's what I'd want to do on this one. Down here at this 3s, wherever we get, I would probably look to go long. Now, with a stop slightly below, and you could always flip short if you're, because there's always the potential for a false breakout. But when you come down, start, hitting that support, I'd look for a bounce off of that and then move higher. If it doesn't do that and you break down, cover your, close your long and you could go short. But that's what I look for. And then resistance, there's definitely some resistance right up in here at about 403. A break above that, it's probably all-time highs as your next level of resistance. Okay, there's LMT, SPCE. Yeah, I've been looking at this one. It broke. So there's your uptrend line. I didn't short this. I just didn't see it. I just didn't catch it. But there's your uptrend line. Nice clean uptrend line. This, when everybody was bullish about this thing, was basically back here. And, everybody just gets bullish and is buying these things when it's just going straight up. Usually that's not the best time to be buying something. But you held support right there. This is a daily chart. Held support there. And you've got a sell signal. See the gap down? Gaps are great for sell signals. This was a gap and crap. So you gap down and just, sell off. I mean, that was a drop from, if you bought that, if you went long at support the previous day, and oftentimes, when you get a sell signal, a lot of time they don't give you an opportunity. They don't give you a clean entry because here's the thing. It closed the previous day right at support. So that, you go long at support. That's what people do. But one thing that you necessarily didn't want to do, and you didn't really even have any negative divergence either on this thing. So again, it just wasn't, a clean short. It's not something, I'm going to short, but you'd want to short on this breakdown because that's a clear breakdown. But anybody who was long, they got trapped because there was no sign telling them to get out. And so you gap down and, that was a drop of 12, 13%, something like that. Selling. So, back test or objective areas to short at on this one is what I see. And, where do we go? Well, you got some support. Looks like, I'd probably have to tighten this one up a little bit. Yeah, probably right in there. We'll say 1490 as your first level of some major support. So we might just head straight down to that, or you could backtest and then roll over. I'd be looking to short this thing. Not here. I wouldn't want to short here. I'd want to short on a back test. That's really it on this one. I'd only really want to short on a back test because it's already about halfway to the target. So your risk reward isn't that great. It's reduced. Your risk, if it bounces here, you got a risk of 30%. Let's say it recovers, and you'd be down 30% when you have to take that loss. And your reward would be about 30%. It's about a 1-to-1. Not good enough, But if it does a back test, now, I've got a risk. If it recovers, maybe we could give it 8% or so of a risk and a reward of 40 to 50%. That's a great risk reward. So that's where I'd be looking to short at. Okay, guys, that's all I got. Leave me a thumbs up on your way out. I do appreciate that. Take the course. If you guys haven't taken the course, take the course. It's a good course. There's no BS in that course. It's just literally me giving the knowledge and skills that I've learned on technical analysis It's about a 5-hour course. You'll find the link in any description of my videos. And, I charge $100. All right. A lot of those guys, they're charging Warrior Trading charges thousands of dollars, and I think they're kind of a scam, but that's just my opinion. I'm charging $100 and just giving you guys some knowledge there. And so thank you, and I will catch you guys on the next video. See you guys Monday. Bye.